Ladies and gentlemen, good morning to you all, and welcome to the third annual conference of the Quoted Companies Alliance, Engineering Growth for Small and Mid-Sized Quoted Companies. Thank you to all of you for attending. We really appreciate it and hope you'll have a very enjoyable and enlightening day. I'm Tim Ward, and I have the privilege of being the Chief Executive of the Quoted Companies Alliance. I'm delighted that so many of you can join us to debate and discuss how we continue to fuel the growth of the small and the mid-sized quoted company sector. Before I say a few words, I've got to do the usual housekeeping stuff, so please silence your mobile phones and any other gadgets you have. However, we won't take offense if you look at your mobiles to check our tweets about the conference. The hashtag and our Twitter name are on your agenda. Exits are clearly marked, as they say, and no fire alarm practices are scheduled. Last year at this event, I spoke about confidence in the UK economy starting to return. This year, we've seen this confidence reflected in the growth of activity on equity markets, especially in the small and mid-sized quoted company sector. This has had a positive impact across the ecosystem. There have been nearly 30 new admissions to AIM from January to date, almost 5 times the number of IPOs on AIM during the same period in 2013. Companies are raising money and doing deals, and our small and mid-cap sentiment index tells us that the majority of companies and advisors in the sector believe that investor interest has increased. They also tell us that equity markets, the majority of companies believe that equity markets are supporting their development. But it remains to be seen whether this activity is sustainable. Whilst it's great to see new growth companies coming to market, there are still concerns. Many commentators have highlighted high valuations and asked whether all the IPO activity is distracting investors away from secondary fundraisings of existing quoted companies. In addition, hardly any of the growth companies that have completed an IPO this year have involved the public in an offer. Most have focused on placing shares with institutions. This is no great surprise, as advisors often cite the cost, both in terms of time and money, of producing a prospectus as a key obstacle to including the public. The relaunch of the wider Share Ownership Council is a very welcome initiative in this area. A continuing concern for the last 3 years, in good times and bad, has been that there are still a third of small and mid-cap quoted companies that believe that equity markets have no impact on their company's development, and we believe that this needs to change. Clearly, the markets have changed significantly since I stood here last year. But there is still much work to be done to ensure that the UK's engines of growth have open and continuous access to permanent public equity capital. The Quoted Companies Alliance has had its successes, but there's much more hard work to do. We've been hard at work to make markets work better for small and mid-sized quoted companies. This past year, we saw 2 of our major campaigns to help increase investment in the small and mid-sized quoted company sector come into effect. With the London Stock Exchange, who did much of the heavy lifting, and others, we succeeded in getting growth market shares to be allowed in ISAs and stamp duty removed on trading in these shares. These steps have helped liquidity significantly. We welcome the Treasury and the UK government's decisive action in this area. I might just add that we also appreciate the strong relationships that we've built with the Treasury, with BIS, with HMRC, with the Financial Reporting Council, the International Accounting Standards Board, the European Commission and the Takeover Panel, to name just a few of the organisations that we interact with. But as ever, there is much still to be done. We're participating in a European-wide IPO task force to address the fact that equity markets are not currently built to deliver finance efficiently for growth companies. We're campaigning for changes to the Prospectus Directive so that small and mid-sized quoted companies can raise equity finance from the public more effectively. We continue to push for fiscal incentives to encourage investment in growth companies. In particular, making the cost of raising equity tax deductible to bring it in line with debt costs, and pushing for the removal of the 5% shareholding requirement for entrepreneurs' relief. And we continue to develop educational material to inform the market, including our most recent guide, Are You Ready to Grow as a Quoted Company? Our fund manager and market maker programs continue to be very well received. These are just a few of our activities to fuel growth for small and mid-sized quoted companies. And naturally, our conference today focuses on this. We're witnessing a move in policy and policies across Europe and the UK, from policies ensuring financial stability to policies now promoting growth. Underlying this, I believe, is a move from bank finance to permanent equity capital. But the equity markets need to innovate so that they're open for business longer throughout the economic cycle. They need to provide a valuable service for growth companies. Today, we want to explore how to improve equity markets so that small and mid-sized quoted companies can grow and create jobs. We want to debate what the small and mid-sized quoted company community and the UK government can do to create vibrant equity markets. We want to inform you of market developments and discuss topical issues. We will highlight the importance of this sector to UK economic growth. And as ever, this is an interactive day with panel sessions on enhancing public equity markets, tips for meetings with investors, and building better boards. We have breakout sessions on reporting, share trading, and emerging forms of finance. And we've leading entrepreneurs, John Moulton and Luke Johnson, who are going to share their experiences of building and growing companies. Rest assured, we'll have plenty of time for questions. And please take part in our live surveys powered by YouGov at the end of each session. Voting pads are on your table, and we'll show you the results straight away. Before we start with our first session, I'd just like to thank our sponsors who've made this event possible, all the leading professional firms in the sector. Our headline sponsors are Crowe Clark Whitehill, Winterflood Securities, and Standard & Poor's Rating Services. And our supporting sponsors are YouGov plc, Zeus Capital, and ICAP Securities and Derivatives Exchange, ISDX. We really appreciate your support in making this conference possible. I'd also like to thank each and every one of our speakers who've given their time and experience freely. We really appreciate their support too. Thank you. Your reward will be in small cap heaven. YouGov have got a presence in the breakout area at the back where you can take part in our 12th Small and Mid-Cap Sentiment Index, which each quarter tracks the business sentiment of the sector. It only takes a few minutes to complete, so please help us to help you by completing the survey. We've got a very busy day, and we'll try to keep to our demanding schedule. If there are any Costa Rican supporters in the audience who want to slip out early, we quite understand. England supporters will, I assume, will probably want to stay as far away from a television as possible, so we look forward to a full house when Luke Johnson speaks for the final session.